Hello and welcome back to the Market Maker podcast. And we've got three topics we're going to discuss in this conversation. Number one, Trump just flipped his stance on Ukraine, saying that Kiev can retake all of its land. Defense stocks, particularly in Europe, have surged. Rheinmetall, the German arms manufacturer, the fifth largest European arms manufacturer, in fact, is up nearly 2,000% since the war between Russia and Ukraine began. So we're going to unpack why are they such an outlier, what's happening to defense names as NATO's pledge to boost defense spending continues. Second story, of course, Nvidia. They have planned $100 billion investment into OpenAI alongside its ongoing deal-making spree. We've also had news this week about Alibaba, last week Intel, signaling a strategy to cement their dominance as the indispensable engine in this global AI race. And then HSBC just claimed a world first in quantum computing. So look, everyone's talking AI. I want to talk a little quantum for the back end of this episode. And the reason why is HSBC, they're boosting bond predictions by 34% accuracy, they said. And in the world of finance, where 1% significantly moves the dial, they put out there in a demo test 34%. It's experimental, but even if part of this is real, it could dramatically reshape finance, competition on Wall Street, and careers in finance. So I want to kind of loop it back into that side as well. Quick shout out to Saab, our new podcast researcher, doing an awesome job for us. So Saab Ertam, thank you very much. And then also, final one is we're on 821 Spotify ratings. I would very much love to get that to 1,000 by year end. Year end target, 1,000 locked in. Let's go. So over to the first story then. So Piers, Trump, bit of a surprise. He has done, well, is it a surprise? I don't know. He's done a U-turn again. Trump said Ukraine could retake all occupied land. That obviously reverses earlier suggestions that Kiev should give up territory. So first of all, what was the market reaction to that?
Yeah, well, is it a surprise? I mean, I guess the thing about Trump is he just keeps flip-flopping and, is prone to changing his mind seemingly on the fly, every day or two or whatever. So, I mean, it's an unsurprising surprise, if you see what I mean. But it is a massive flip and U-turn on his whole stance around the Ukraine situation. Of course, he's been trying to broker the ceasefire and the deal, right? But Putin seemingly not playing ball. So it looks like, in my opinion at least, it's a part of this is about him trying to, it's a kind of veiled threat to Putin to say that, look, if you weren't prepared to come to the table to broker a deal, well then, all right, game's back on, right? But of course, Trump wants to avoid getting kind of boots on the ground involved in this kind of thing. And so he's kind of pointing towards the Europeans, and it's their responsibility, and really blaming the Europeans for not getting kind of doing their share in this whole situation. And so what's the market reaction to this? Well, the most standout market reaction was the European sort of defense companies. And they've kind of marched higher. Part of this is because, NATO's pledge to increase defense spending to 3.5% of GDP. So we know that the Europeans have been woefully off that sort of pledge for many years. And, Trump has been kind of banging them for that for a long time. And so commitments from European governments to spend more on defense, of course, is good news if you're in the business of supplying military equipment and defense items, right? Now, there's one standout, though, player who's benefited more than anyone else from this. And this is a German company called Rheinmetall. And they're actually, since the Ukraine-Russian war began, they're now up 2,000%, their share price. That is.
Yeah, I saw that. And I saw a chart, and it was a whole cluster of these European defense names, because there's quite a few. And they've all gone up dramatically. But this German firm was up way over and above everyone else. So why is that? Why are they up 2,000 when everyone else is only up about sort of 200 to 400%?
Yeah, so this is where you've got to, if you kind of just go below that first layer. So the layer one is, more defense spending, right? who are all the defense companies? Right, let's buy all of them. That's kind of layer one, right? If you then go one layer down, well, this is where you can find some massive outperformance, because what do Rheinmetall specialize in? They're Europe's biggest ammunition producer. Now, there's two interesting things to that. Firstly, the EU and NATO have named munitions resupply as their top short-term defense need. Number one. Number two, you can bang out these munitions, like just turn on the tap, and it doesn't take long to manufacture munitions. If you're in the business of building, high-tech kind of missiles, or let's say high-tech airplanes, right? I mean, these take a long time. You can't just turn the tap on and off with that stuff. So Rheinmetall are seen to be here perfectly positioned to benefit in the straight away short term from the defined kind of top sort of priority to kind of load on the munition side. So yeah, they're the ones that are going to benefit the most and in the shortest term. And so it's kind of an ammunition pure play, if you like. And so they're top dog, and that's why investors have been buying those shares like they're going out of fashion. And 2,000% return. I mean, that war has been going on, unfortunately, for like 4 years now. So it's a 2,000% return over a 4-year period. And seems like that upside's still on the go.
Yeah, I guess one of the things is the long-term tailwinds here that they're going to benefit from, because when you said there about 3.5% of GDP that NATO's kind of pledging, assuming though that pledge is several years. Well, I don't actually know what the defined timeline is, or is it until we decide to change again in the future? So they'll continue doing that.
Well, there are risks to this. It's all very well and good that your policy is, right, we're going to aim to move towards spending 3.5% of GDP on defense. The problem is all of these governments, maybe with the exception of Germany, to be fair, all of these governments have got a massive debt problem. They're trying to figure out ways of spending less, not more. So, that's obviously the key barrier here, the key risk to all of this policy. It's kind of execution risk and whether it's possible or not.
Yeah, it's interesting as well, just on the final point on this before we move on. I think the Trump angle politically, where it's, he went in, I think he was going into some of these big confrontations like with China or with Putin, and he was trying to strong arm a deal. But as you said, the Putin interactions have kind of happened, have kind of been and gone, and seemingly the war is continuing at a pace that hasn't really changed. And so I just wondered whether the calculations have been that, this now he's got more into it, it's just avoiding it becoming his war. Let's just be a strong figurative person within the talks. However, this is really Europe's problem, so that it doesn't really come to get him back later down the line.
Right. And look, Putin, I mean, apparently the economic situation in Russia is deteriorating, and it seems like the speed of deterioration has picked up a little bit. So that's bad news for Putin and his war, right? And so he needs an off-ramp where he can somehow get out of this and still claim a victory. And maybe Putin's just now threatening that by saying, look, maybe this war's still on. Maybe the Ukraine can regain territory. That is a risk, Putin. So come to the table now and do a deal.
Yeah, interesting. All right. Well, look, let's move on, talk Nvidia, because this was a big deal, and I came a little bit as a surprise as well. So the headline was that Nvidia and OpenAI announced a landmark partnership with plans for Nvidia to invest up to 100 billion. So I guess a couple of questions here. What exactly is the partnership? How are they, putting the funds in? How does this work in practice?
So this is a letter of intent, has been signed. So this is Nvidia saying, and OpenAI, of course, agreeing a deal, at a top level in principle. The deal is $100 billion of investment. So this is Nvidia investing $100 billion into OpenAI. But look, this is going to be staged over time. This is one key part of this deal. The overall idea is to help OpenAI, build out 10 gigawatts of AI data center capacity. So obviously on one side, OpenAI's growth ambitions, I mean, at the moment, they've got about 700 million weekly active users on ChatGPT. Obviously, each person that's using this, that requires compute, right? You need a data center to be able to handle their questions and then do the thinking and then fire back the answer, right? So the more people you have on the platform, the more compute power you need. Also, as they're upgrading, they're going through the generations. What are we on ChatGPT 5 now? Each new version is better, meaning it needs more compute power anyway. So you've got this exponential compute demand as these ChatGPTs get more advanced and the number of new users increases at the same time, right? So it's about how the hell can we meet this demand? And so this is why you're getting all of these kind of data center build out deals being done. Because don't forget, OpenAI has already done a $500 billion Stargate deal with SoftBank and Oracle, okay, with the US government getting tied in. So this is just another deal. Now, the way it's structured, their plan is to build out 10 gigawatts, right? But they're going to kind of do it 1 gigawatt at a time. So initially, it will be 10 billion of the 100. 10 billion will be upfront and land in OpenAI's bank account on the signing of the deal. So that's the first point. It hasn't been signed yet. A letter of intent is, right, we've agreed in principle. And apparently, it was just Jensen and the OpenAI CEO, his name has just completely escaped me. Chris Altman. Sam Altman, sorry. So they brokered this deal together, like literally CEO to CEO, no bankers, no advisors. Like they've been talking for a while.
Can you imagine these egos, the size of these egos?
And they both went, where they finalized the letter of intent was when they were here in the UK. Because Trump did a state visit and he brought a load of his big guns with him, including Jensen and Sam Altman. And apparently on the outskirts of all of this stuff that was going on, they finalized this deal. Just the two of them, apparently. So look, stuff needs to happen now. The lawyers get involved. Obviously, M&A advisors get involved before it actually gets signed. But if it gets signed, 10 billion in the bank account for OpenAI. So that's number one, right? And then they're going to do this over time. A 1 gigawatt sort of build out each, a time times 10, right? Now, apparently, so here, what does Nvidia get? Well, they get an equity stake in OpenAI. Now, how much for the 100 billion? Well, we don't know yet because it's going to be in stages and OpenAI is going to be growing and their valuation is going to shift over time. I guess what we do know is that right now they're worth about 500 billion based on their last funding round. So 10 billion up front would get Nvidia a 2% equity stake. Okay. The beauty of this for Nvidia, though, this money's coming back. It's like, here's 10 billion. Oh, but by the way, a condition of the deal is you've got to spend that 10 billion on buying my chips. So this money is going to do an about turn and temporarily be in OpenAI's account before it now comes back into Nvidia's. We'll talk about this in a bit more. It's kind of a circular deal. Is this like double counting from a kind of revenue point of view? So some people are being pretty critical about this is a bit dodgy. But it's not dodgy from a legal sense, but it's like, is it kind of overinflating Nvidia's revenue growth if essentially they're growing it with their own cash? So there's that kind of angle to it. But look, what do they get out of this? And this isn't just chips, by the way. So this is OpenAI will be spending this money on Nvidia's next gen Vera Rubin platform. Okay, so this isn't just their chips. This is a wider platform for these data centers. One risk is this Vera Rubin platform ain't finished yet and it hasn't been shipped. They're still in the design phase. It's due for delivery autumn 2026. But their Blackwell chip, that was late, and they shipped that a few months after they were kind of saying they were going to. So there are risks here in terms of can they deliver and ship Vera Rubin in time? But look, if if they do, well then fine, right? This data center build out cracks on, and each gigawatt then will release another 10 billion of transfer from Nvidia to OpenAI. So that's the kind of deal at the top level. Oh, and by the way, just finally, just on this first phase of the conversation, it's not just 10 billions coming back, right? Because Nvidia have guided, and this was earlier in the year, right? For every 1 gigawatt of data center build out, it costs about $50 to $60 billion. Okay. That's for the total spend. About 35, so just over half of that is typically spent on Nvidia hardware. Okay. So if you add it all up, if they're doing 10 gigawatts, then they're going to end up spending about 400 billion on Nvidia stuff. So this is Nvidia saying, here's 100 billion. We will finance your data center build out ambitions. We'll take an equity stake for that. Thanks very much. Oh, and by the way, you've got to buy our stuff. And we're basically going to 4x our investment in terms of direct revenue back, over this 10 gigawatt build out cycle.
Sounds like a cheeky little PE deal going on here to some extent. But like what? So I think Nvidia, they generated just over 70 billion in free cash flow over the last 4 quarters. I mean, which is just insane.
Wow.
So is this way of operating, is this like a new paradigm now where it's like, actually, this is quite unique in a scenario where, they do have financial firepower. This isn't about, I'm going to buy you. Yeah. It's an invest play.
Right. I mean, if you think about this and there's a few angles here, right? It's like, can they afford it? Does this put at risk Nvidia's business? Are they taking on too much risk here? That's kind of one angle. Another one is, well, what does the regulator think about this? Are there any antitrust risks and so on? But they definitely can afford it. I mean, as you're saying, they are just spewing out free cash flow, and actually 72 billion over the last 4 quarters. But if you look at this fiscal year we're in now, of course they're growing, right? Every quarter they're growing faster. So in the fiscal year we're in now, they're expected to churn out 100 billion of free cash flow. So that kind of covers this like in one foul swoop, just in 12 months worth of business, right? So they can definitely afford it. Don't forget, in parallel, Nvidia issued a 50 billion share buyback program last year. This year, they've upped it to 60 billion. They got so much cash. They just don't know what to do with it. Okay, so they can definitely afford this. On the antitrust thing, it's quite clever because obviously the antitrust police kind of get involved when the big guns are doing full acquisitions, where they are buying entire companies, and then the regulator's like, whoa, hang on. You're getting far too much control here of a particular situation, and this isn't good for competition or for price points to consumers and all the rest of it. But here, look, this is Nvidia just chipping away, buying initially a 2% stake, right? That's not a big enough stake for Nvidia to be able to control anything that OpenAI does. And OpenAI have got plenty of other investors, Microsoft, Oracle, and so on, right? So I think this is an interesting play where it kind of falls under the radar, I would say, or at least for now, the sort of antitrust police. And really, it's more of a kind of, I guess it's a compute land grab for Nvidia. They're saying, well, look, OpenAI, they're a different vertical to us. Nvidia, they're the kind of infrastructure build out for AI, right? OpenAI, well, they're the product that's then the app that sits on the top of this stack. They're the consumer facing entity, right? At least for now, they're the biggest. So Nvidia are saying, look, let's lock them in to our vertical infrastructure stack, so that we're kind of making sure we've got a continued majority share in that compute land grab that's kind of going on all over the world. And we'll come on to it, but Nvidia, they're not just investing in OpenAI, right? There's deals going on all over the place here, and it's all about trying to maintain their kind of dominant market share on that compute side.
Yeah, I just find working in the strategic department of Nvidia at the moment must be such a like a brain box of like intelligence going on how to maximize this, because they announced that partnership with Alibaba to bring its physical AI development tools. So thinking things like autonomous vehicles, robotics, smart spaces, and into Alibaba Cloud. And again, it's, I guess, like you were saying, it's this, you think about China, this is a major global distribution channel for your GPUs, your AI software stack. So it's all sort of feeding into this same theme, isn't it?
Yeah, AI is global, right? I mean, all right, we spend most of our time talking and thinking about the US, and fine, they are leading this race, but obviously it's a global thing. And so if Nvidia can get a big slice of some of the action in the China market via their Alibaba tie-up, well then obviously that kind of makes a lot of sense from that sort of global perspective.
Yeah, and also, I was just going to say, like, a bit of detail there, like locking in the timing is interesting, because on the Alibaba side, there's this Qwen 3 Max model rollout they're in the midst of at the moment, and it claims to outperform rivals. And this is obviously a key use case of AI. It's encoding in autonomous agents tasks, and so if they can get in now and dominate what is China's top AI players and secure a critical role in powering their cloud systems, and it's a stroke of genius.
Yeah, and like they've also taken up a 500 million, or they're in talks of doing taking a 500 million stake in Wavy, which is a UK based kind of sort of car, basically it's like rivaling Tesla's kind of autonomous vehicle sort of brain, if you like, and they're taking a stake here in the UK. So again, that's like just trying to diversify outside of, obviously Nvidia's big customers are the superscalers. They're the Microsofts and the Amazons and the Metas and the Googles, right? So it's just trying to diversify themselves away from just those kind of big tech superscalers and like be a bigger, wider part of this broader AI future that's obviously sprouting out in many, many directions.
One of the big things here, the risk factors you said about on the regulatory front. So also what I find is really fascinating about Nvidia's approach is they invested 5 billion into Intel. So they struck a partnership to co-develop some custom GPUs that could easily integrate into Nvidia's GPUs. Now, what was, I think, is really clever about this is that the deal, so the context, the US government said it's going to take a 10% stake in Intel. This was like a month ago. That deal converted nearly 9 billion in promised grants and equity and made the Commerce Department Intel's largest shareholder. So this latest agreement Nvidia's done, I think it just shows how a lot of these executive leadership teams, they're viewing efforts to help Intel as a little bit of a, let me help you, Trump. You've got objectives and ambitions. Let me align with you. And one of Jensen Huang's top priorities, of course, is he wants to export Blackwell chips to China. Yep. And so how does he get favorable terms? Well, look, if I scratch your back, you scratch mine. So again, it makes a lot of sense.
100%. This is a big, Jensen is playing at the top political table. He was part of Trump's party on this state visit here over to the UK. He is 100% playing a political game here. And that China export sort of ban, I mean, basically they're doing it, they're negotiating, but basically what Jensen's hoping for is Trump to agree that they can start shipping Blackwell chips, but not full Monty Blackwell. Apparently they need to be 30% less capable than the full Monty Blackwell. I think this is the number that's being negotiated, and Trump's going to say, okay, if you kind of dumb these down a touch, fine, you can send them. And of course, don't forget also, Trump's done a deal with Jensen where they're going to get, I can't remember the figure, was it 30% of revenue from chips getting sold to China goes to the US government. So this is getting crazy political. And look, we could have a whole conversation on a tangent here about the US government's role in essentially what are private and public companies and whether or not that is a good direction for the US government to be taking. That's a whole different conversation. But right now, Jensen's got to play the politics game. And you know what? Looks like he's playing it pretty damn well, to be fair.
He's at the top table. So maybe just to pull all of this together then, there's kind of 5 components of it, this particular story to summarize, because it is a really fascinating one. So number 1 is the partnerships. Many of these different firms we said. So Nvidia investing in partners like OpenAI, Alibaba to secure chip demand, reinforce its role at the backbone of this build out, this infrastructure for AI. Number 2, compute power. That's obviously the priority here. You said this in nearly every episode. You just can't keep up pace at this point. It's the new battleground. It's kind of massive energy, financial costs shaping the competition landscape. The circular loop, I guess there's pros and cons here. There's the funding customers who reinvest in your demand. Makes a lot of sense. But also, I can see the point. I'd love to get people's opinion in the comment section about capital recycling rather than true underlying growth and value. And then number 4, the political levers we've just been talking about, the Intel stake, UK investments, alignments, US, UK government. Why do they do this? Well, they want to win favor. They want to reduce kind of regulatory friction, headwinds. And then finally, interesting for the investment bankers listening, is Nvidia avoids large-scale acquisitions. So one of the stats I saw here, and a shout out again to Saab, our researcher, he said the 2020 acquisition of Mellanox is so far Nvidia's only M&A deal valued over $1 billion.
Yeah.
I mean, we're talking here with this latest pop this week. Nvidia's a $4.5 trillion company. And we've been used to seeing big tech like Facebook back in the day gobbling up the Instagrams, the WhatsApps. These guys have only done one deal over $1 billion, and here we are. It's amazing.
A $4.5 trillion company that spews out $100 billion of free cash flow every 12 months, and yet they've only ever spent $1 billion or more on one acquisition, and that was 5.5 years ago, which was before this AI kind of accelerated boom even began. Of course, this is pre-Chat GPT. I'm going to put 2 other thoughts on this to kind of wrap. Number 1, is this, and I was reading the Lex column in the FT, which is, I'd recommend.
Let me guess, they're going to be critical. Let me guess, they're going to be critical.
Well, that's it. So you've got to understand their flavor. You've got to understand their flavor.
They need to look, the sun's shining. I know it's cold, but it's not raining. Come on, guys.
They're basically saying, look, this circular thing, as in OpenAI, here's 100 billion. Oh, you got to give it us back though, and we'll mark that up as revenue. They're like, come on. They're basically calling this, and I'll quote, this is partly theatre to keep the flywheels spinning. So to keep this whole kind of story about the AI revolution going, obviously Nvidia needs to carry on growing. So how are they going to achieve that? They're going to fund other people to then self-fund their revenue growth. So that's one.
I'd say
that's one angle here.
Welcome to something that's been happening through the history of time. It just happens to be in the context of AI. I mean, I love it when market traditionalists. It's kind of like market traditionalists sit here, the crypto crew and NFT group sit here. This AI one's kind of somewhere in the middle, and it's like as soon as it's threatening traditional landscape of finance, they're like, "Oh no, it's all bad." But go on. Well, you have a second point.
Well, you're right. This isn't new because Lex were referencing a Nortel Lucent deal in the early 2000s. I won't go into it now, but they're basically saying it's the same again. This isn't good. The other part is really out of it's kind of out of Nvidia's control to a degree. For all these, you can build all the data centers you want, right? But is there enough power? Is there enough electricity? Number 1, is there enough energy? And number 2, is there enough infrastructure to get the energy to the data center. So there are big power and energy infrastructure challenges here. So again, and partially this is about the government, and partially this is about the regulatory environment around getting permits to increase energy kind of production, but also permits to kind of transition this power through the grid and through power lines. So all of this stuff is a definite risk to this huge ambition of like building 10 gigawatts of data centers. Yeah, go for it. But is it going to even be possible from a power point of view? So that's another risk to factor in.
And just to round up, your man Sam Altman and his relationship as chair just so happens to be chairman of Oklo. That's that that nuclear technology fusion power company. So he has got this all worked out. But such are the Altmans and the Musks of the world. They're certainly they've got all bases covered here to meet your second point. But look, just quickly to wrap in about 5 minutes, just a story that I thought I didn't want to go into it too much, but just as a headline, HSBC, they've achieved a breakthrough in deploying quantum computing in financial markets. And I thought this is interesting because it felt like quantum was coming up and then the AI has just kind of superseded it and it's gone backward a little bit. So this was an interesting development because I remember watching a documentary about HSBC and IBM. IBM being one of the forefront kind of, at least US companies in the quantum space. And this was years ago they were talking about it. But basically IBM's Heron quantum processor, and they're using it to improve bond price predictions. So one of the things here, and the reason why it stood out this week, is the bank applied quantum processing to an anonymized set of European bond trading data. And they found it can significantly enhance the efficiency of the market with a 34% improvement in predicting how likely a bond will trade at a given price. Right. Now, I've always struggled to understand conceptually what is quantum computing. So this is the best effort that I can do for anyone who still was in that camp I was in not so long ago. So a classical computer works in bits. Each one is either a 0 or a 1, and it tests solutions at a time in a sequence. A quantum computer uses qubits, which thanks to superposition can be 0 to 1 at the same time. Now, my first question was, what the hell is a superposition? So the easiest analogy I could come up with is think about if you flick a coin. Now, a normal computer is like flipping a coin, and you have to wait for the coin to land before you can then determine, it was a heads or a tails. So you have to flick it, it spins and it lands, and then you pick it up and flick it, and it's one sequence after another, but each event has to occur in a structure. In a quantum computer, think about it again, me flicking the coin, but while it's in the air, it's at any point in time, it's rotating through both heads and tails at the same time. So this in-between state, if you like, is the superposition. Right? Are you still with me, Leonardo DiCaprio?
I mean, I like it.
I was just thinking...
It's the best description I've heard. Carry on.
I'm thinking Inception here, but quantum computers can basically use that state, the superposition, to explore many possibilities at once instead of waiting for the coin to land. So it means that you can solve problems exponentially faster. Like when I mean fast, I mean, dramatically.
Usain Bolt.
Usain Bolt fast. So tying this back then to markets, when I was reading this, I was like, okay, so what does this mean for financial markets? You mentioned the bond pricing. So first of all, who's looking at this? HSBC's been a bit of a front runner. They've been doing this for several years. JP Morgan, Goldman's, they are actually all investors in quantum themselves in-house. Yeah. So the ways to think about this are risk management. So think about if you were testing scenarios, but on an instant basis. Imagine if a piece of news broke and you could run it into your system and automatically then get outputs of it might mean this or that correlated effect or second, third order impacts. And they happen immediately as trading signals, for example, in an automated way. Price prediction, accuracy, obviously, this is what this data was saying. But I know you had a third one as well that some of these banks look at.
What, with regards to what as in price prediction, or
as in fraud, wasn't it? Like fraud.
Oh, I see.
Was another
Yeah,
one.
well, fraud detection and security. Yeah, I mean, analyzing patterns and kind of building new encryption and just kind of massively upping the game with regards to fraud detection, which of course can save them a lot of money. So yeah, that's another angle to it.
Yeah, and so when I was thinking of this, I was thinking, okay, so thinking about a lot of our audience, well, what does this mean? Like, why should a student care about this? And it's this kind of intersection with tech and finance. And I think most students have got a finger on the pulse. You know, the world's moving in a way where quantitative researchers, analysts, these are all quite key. So typically programming skills, advanced mathematics, statistics, leaning towards AI, machine learning, these types of principles. I thought myself when I read this, I was like, oh my God, like what about people like me who don't have any of these skills because I'm not a mathematician by trade? And so what I thought was interesting, and just to finish and share, I was just, talking to AI going, this is the scenario, like what type of roles can I do then within a financial institution that, yes, we've talked about OpenAI and we're talking about all these, it's all very sophisticated, like frontier technology. Yeah. But what about, where does that leave then the human element? And I thought this was interesting from 5 different roles that you could think of. The first one is product and strategy. So there's one thing building this stuff out, but like you said, the Huang and Altman mindset of, okay, how do I engineer situations, the strategic elements of deal making and strategy creation? Like that's very much still led by experience and organizing teams, getting input, stuff like that. So, deciding where quantum should be applied, where it should be applied is just as important as being sure it can actually work and do its thing. So strategic priorities, client-facing sales roles. So, I won't mention who, but I'm doing some actual coaching on public speaking and how to communicate with a fairly sophisticated group of high-end quants, because they're struggling to really articulate to PMs in a way that the PM can understand very quickly. So again, being able to understand this stuff, maybe not be a technical person who's an engineer, for example, but enough where you can articulate it to other people. And also to clients, obviously, external. Then there's regulatory risk oversight. That stuff's only going to get more onerous as technology becomes more influential. Project management, coordinating all these people. And then communication and education. What about these bits about internal comms, your staff training? These translators, I think, is going to become a really important skill as well. So, look, overall, I don't want people to be spooked too much. So they've got to go away and do a PhD in maths. That for sure is going to lock you in on that OpenAI, or what was it, that $100 million salary at Facebook, sure. But there's still a place for me in this world, I'm thankful to say. But look, we'll wrap it up there. Piers, pleasure as always. Thank you very much. And any comments that people have, just let us know. We'd love to know. And we'll see you next week.
Thanks a lot. Catch you later.